There was a little bit of a discussion on one of our videos in the comments below about the subject of what money is, about how inflation works, etc. And I was asked to make a video on this subject, so I'm going to go through with you a little bit about some of the misconceptions about what money is, how this conceptualizes where price stability in currencies comes from, how money works, etc. And hopefully give you a better sense, because I noticed kind of the same recurring thought patterns which can kind of throw people off a little bit. And hopefully it gives a little bit of an insight too in terms of, you know, how we live our own lives and how we would maybe want to see the countries run better. Okay, so we're going to dive into that today, and I mean, it's a fun intellectual activity. So before we start though, if you haven't already, please hit the subscribe button, hit the notification bell. We love and very much appreciate you subscribing. Make sure you don't miss out on any of our videos. We try to produce great content for you every single day. There are a whole backlog of videos you can go and check out. If you like this one, give it a thumbs up. If you don't, please give me feedback in the comments below. Here on this channel, we work on helping you with international living, international business, helping you to figure out what's the right solution for you, and then figuring out how to implement it. So, you know, if you'd like to reach out to us for help with international tax planning, asset protection, payment processing, banking, getting residencies, citizenships, forming companies, opening bank accounts, hiring people abroad, investing, all those kinds of things, please reach out to me. You can book a call, clarity.fm/Michael Rosmer. There's a link in the description below. Or you can check out our websites, offshorecitizen.net, offshorecapitalist.com, and you can send a message through there. All right, let's dive in. So here's the basic thesis of what was being discussed in this comment, which I think is kind of important, okay? And so this starts with a conception of what money is. And a lot of people have the mistaken idea that money has value, or that money should have value. So if you go to a lot of the people who are thinking about the idea of commodity-based currencies, gold, etc., you know, it's this idea of, hey, my exchange of value is I'm giving you value, right? Now, it turns out this is a really bad idea from a systemic perspective, and the reason is it's squandering or wasting resources, right? If you just think, hey, listen, I have to go to all sorts of energy to dig up some, let's just say, precious metal out of the ground, and I have to store that, I have to transport it, I have to refine it, etc. And there's a lot of energy involved in that, right? And then what I'm doing is I'm taking this valuable resource that could be used for something else, and I'm taking it out of circulation. I'm basically creating demand for that thing, which drives the price of real goods and services up. That's not so great, right? And so a lot of people, yeah, they just have this idea that money equals value, as opposed to money is communicating the value that's behind it, okay? And I'll talk in a minute about how that works. So let's just imagine that what you really want is you really want to reduce the cost of money, period, because what's really, really important, the fundamental core that we're all here for, and if we want to, you know, better the world and better our lives, etc., we need to be focusing on delivery of real goods and services, right? The problem in a lot of these societies today is you have enormous amounts of rent seeking, you have a lot of focus on, you know, financial instruments and people trading financial assets and never really producing any real value in the society, right? And if you just think, you know, at a base level, everybody's kind of riding on the people who are producing real stuff, right? So now that could be knowledge work, right? Not saying it can't be, but, you know, certainly a lot of these other things really don't add value, and you're kind of burdening the system more and more. And of course, there's a system of incentives that reward that sort of behavior, but it doesn't mean that it's good for the system as a whole, okay? So what is money really? Money is an IOU, okay? If you just think about this, basically what happens is, you know, I go to you and I say, hey, listen, you know, I would like this for you, and, you know, you don't have anything you want from me at the time. I'm willing to give you an IOU for something in the future, okay? That is what money is. It's a record of an IOU. And so people will say, hey, listen, that has no value, right? It's like monopoly money or something. And this misunderstands the idea of money, because the whole point isn't that that paper or that, you know, digital record or something is what has value. It's what's behind it that has value, right? So there is a big difference between currency, or like a real IOU, and monopoly money, right? As much as some people would like to conflate the two, it's not accurate. So if you just kind of think that, you think, okay, well, then what determines the value, right? And the value is really determined by the creditworthiness of the, basically the person, the debtor, right? The person who's issued the debt. In other words, if I've given you an IOU, how much is that IOU worth? Well, it depends on how willing and able I am to honor that IOU. Okay? If I'm not willing or able to honor that IOU, well, then the value goes low, right? If I am willing and able to honor that IOU, then the value goes up, right? And, or at least preserves its value. And of course, if the collateral that it's backed by is decreasing in value over time, then of course, again, the value of the IOU is decreasing in value over time. Okay? And so, without going into a big explanation of how, currency today is an abstraction across the economy and things like this, let's just recognize that today, of course, I'm not giving you an IOU from me that's individually written out, right? We've built an abstraction, which is modern currencies, right? Whether it's US dollars or British pounds or JPY or, Swiss francs or whatever, right? So now let's go and say, all right, well, why is there price stability here, right? That was part of the conversation. And the reason is precisely because of the fact that there are goods and services priced in that currency, okay? So if you have nothing that is priced in that currency, all right, you're gonna have wild fluctuations in the value, okay? So this is a little bit of a problem with cryptocurrencies right now, right? Cryptocurrencies typically aren't backed by anything. There's no collateralization, there's no real IOU there, right? There's just kind of the idea that somebody else is going to give you more for it in the past or in the future. And it would be different if items were priced in, say, Bitcoin, right? If it was like, okay, I can go and I can buy this house and the price of the house is in Bitcoin. Now notice there's a really big difference between I could utilize the Bitcoin to buy the house, and that's not necessarily the same as having the house priced in Bitcoin. I'm going to explain why this is important in just a second, okay? If the house is not priced in Bitcoin, then what really happens is I take the Bitcoin, I convert it, and I buy it in whatever currency it's in, or clothes, or cars, etc. Okay? What provides the price stability can be seen in international trade. Okay, so I have a business that purchases vehicles in Canada and sells them around the world. Okay, this is a business I've been involved in for quite a number of years, and we're basically taking advantage of differences in markets and arbitrage in currencies. Okay, so what happens? Well, if we'll just use Canada and the US as an example, if the currency in Canada drops, right, because there's all sorts of real goods and services which are priced in Canadian dollars, right, the cost of those things just dropped, right? What this means is that people from the US will go and they will buy Canadian currency in order to buy these real goods and services at a discounted price. And what that does is it creates demand for the currency, which helps to provide some stability. It's not 100% stability. Of course, you have currency variations, right? But that international trade balance helps to level things off, okay? And the opposite is also true, right? If it was, hey, listen, the goods and services go up in value, or like the currency goes up in value, well then, let's say the vehicles are going up in price, right? What's that going to mean? It's going to mean that people in Canada are going to be more likely to go and spend money buying US dollars, because then they can buy US vehicles at a discount, and you're going to get this leveling effect, okay? That's very important to providing stability to currencies. And again, like I said, it's far from 100% stability. Obviously, there's arbitrage differences, and there's a whole bunch of reasons why that happens. And of course, there's both sides, the supply and demand side of the equation. But this is really, really key. Okay. Now, why do I bring this up? Well, what this means is if you're looking at something like cryptocurrencies, you're unlikely to get the same level of price stability or value stability, or whatever you want to call it, amongst cryptocurrencies until things are priced in that currency. Now, it turns out that the biggest thing that, like the biggest quote unquote good or service that is priced in a given currency is actually debt, right? So this is why if you go back to like March 2020, when the stock market crashed dramatically, what did you see? You saw the US dollar spiked up. Why was that? Well, it's because of the US dollar denominated debts around the world, right? So you had kind of like all this money flowing in there in order to be able to cover off those debts, and it created this demand. So in reality, if just think if I can turn around and I can buy the mortgage on a house, right? Or if I have the obligation to pay my mortgage in US dollars, right? This creates demand for those US dollars regardless of anything else, right? That's what it's denominated in, I have to. And there's only so much that I can do. So yes, of course, there's still going to be some instability, but the fact that you have this US dollar or Canadian dollar or British pound dollar, not dollar, British pound denominated or Swiss franc denominated or Serbian dinar denominated debt creates demand for that currency, which is then going to help to level things off to some extent, right? So anyway, that's kind of like the basic idea of just thinking about money and thinking about how currency stability works internationally and why it is that things are not likely to just suddenly go to nothing or suddenly rise to, you know, some ridiculous degree because you have these counterbalancing forces. There's more to it than that, of course, but this is kind of a brief explanation and I hope it's interesting to you. Certainly I find it interesting. And yeah, so share your comments below. Would love to hear from you. Again, hit the subscribe button, hit the notification bell if you like the video, share it with your friends, give it a thumbs up. If you don't like it, please tell me why. I really appreciate the feedback. And if you would like help with anything to do with international structuring, international tax planning, asset protection, forming companies, opening bank accounts, etc., please reach out to me. You can book a call, clarity.fm/Michael Rosmer. There's a link below, or visit our websites, offshorecitizen.net, offshorecapitalist.com, and send a message through there. I'm going to see you guys on the next video.